Hello everyone, welcome to lecture 2 of Debentures Accounting. In lecture 1 we studied that shares can be issued either for cash or for consideration other than cash. Now in the summary you have already written the first point, that is issue of shares for cash. Today we take up with the second point, that is issue of debentures for consideration other than cash. Now first of all, what do you mean by other than cash over here? It means, see, issue of debentures for cash means simply for cash. You give the debentures and you get cash, means you get the money in your bank account. But when we say consideration other than cash, means against the debentures which the company issues, they don't get cash, they don't get the money in bank account. So question arises, what do they get? Other than cash, what they get is assets. So say you buy a machinery, and the amount of machinery you pay in the form of your own debentures. So you are giving the debentures, but against the debentures what you are getting is machinery. What is that machinery? Consideration other than cash. Or sometimes maybe you buy the entire business. Entire business means you buy assets as well as its liabilities. You purchase the entire business means you purchase its assets as well as liabilities. And how do you pay the purchase consideration for that business? In the form of your own debentures. So consideration other than cash means either you get assets, or if you buy entire business then you get assets as well as liabilities. Now two main entries will come over here, so all of you give this heading in your notebooks. Point number B, not point number A, point number B, issue of debentures for consideration other than cash. A was issue of debentures for cash. B, issue of debentures for consideration other than cash. Other than cash means in bracket you can write assets or assets and liabilities. Now, first entry what we will pass is for taking over or for buying assets and liabilities. Okay, first you take over assets and liabilities or simply assets of other business. So first entry pass will be for taking over assets and liabilities. Now here assets of other business become our assets. Assets have debit balance. So to bring it in our books, assets account we will debit. Same way liabilities of other business becomes our liabilities. So credit the payables. You'll credit the liabilities account, and the net amount is what you have to pay to the vendor. Suppose you buy assets of 10 lakhs. Okay, I repeat just for an example. Suppose you buy assets of 10 lakh and there are liabilities of 3 lakhs. Means what would you pay for that business? The business which you are purchasing has an asset of 10 lakhs, means when you buy that business, you also get assets of 10 lakhs. But you take over the business means on the behalf of that business, now you are going to pay the liabilities of 3 lakhs. So the net benefit what you will get by buying that business is 10 minus 3, 7 lakhs. So you can say that 7 lakhs you will pay to the seller of that business. So amount is payable to the vendor. Vendor means the seller. Credit the payable to vendor account with the difference amount of 7 lakhs. This is just for an example. Okay. So these figures you may not write. Assets account debit to liabilities account to vendor account. This will be the entry for taking over assets and liabilities. Now here there is one important point. You must pay how much amount to the vendor? 10 minus 3, 7 lakhs. But suppose you pay purchase consideration of 7.5 lakhs. Means against 7 lakhs you are paying 50,000 more. This always happens. Both the parties sit across the table for the negotiations. Negotiations are done. Maybe the other person says 8 lakhs, you say 6 lakhs, and finally the bargaining is done, the deal is done for 7.5 lakhs. But here the company lands up paying 50,000 more. 0.5 lakhs more means 50,000 more to the other person. Now what you are paying more, 50,000 to the other person. Okay, you are paying the money but you are not getting anything. So can I say you are paying the money but what you are getting is intangible? You're not getting anything means it cannot be touched, it cannot be felt, it cannot be seen. So this 50,000 more what you are paying would be treated as goodwill. Okay, you will debit that amount to goodwill account. Means your journal entry would become assets account debit 10 lakhs, goodwill account debit 50,000, because 50,000 also you are paying, but you are not getting anything against that. So in your business, you will show it as goodwill, intangible asset. To liabilities account 3 lakhs, and to vendor account what you are supposed to pay is 7.5 lakhs. So if you are paying more than the net assets, if your purchase consideration is more than the net assets, net assets means assets minus liabilities, 10 minus 3, 7 lakhs, then that excess amount you will debit to goodwill account. Now let us say that suppose you pay a purchase consideration of 6.8 lakhs. Now here you are paying 20,000 less. Against 7 lakhs you are paying 6 lakh 80,000, means you are paying 20,000 less. Now, if you are paying 20,000 less, means can I say that it is a capital profit for your business, one time profit only? You're not going to earn this profit every year. It's not a revenue profit, it's a capital profit. Okay. So 20,000 less what you are paying is a capital profit. Therefore, it would be transferred to capital reserve. So here the journal entry would become what? Assets account debit 10 lakhs, to liabilities 3 lakhs, to vendor you are going to pay 6.8 lakhs. And to capital reserve account, you'll credit with 20,000. In short, you all will write it down as a note. All of it write down as a note over here. Okay. And then I'll give you one shortcut also how to do it without making that workings. So note what you'll write is, if purchase consideration. Okay. One more thing you can remember, vendor account you'll always record with the amount of purchase consideration. Okay. Vendor's accounts amount you'll always record with the amount of purchase consideration. So if purchase consideration is exactly 7 lakhs in the example what I gave you, then neither goodwill will come nor capital reserve. But if purchase consideration is 7.5 lakhs more than the net assets, then 50,000 you'll debit to goodwill account. And if purchase consideration is 6 lakh 80,000, 20,000 less than the net assets, then 20,000 you will credit to capital reserve account. So what note you will remember is, if purchase consideration is more than the net assets, then difference amount will be debited to goodwill account. Okay, then difference amount will be debited to goodwill account. Now, second situation, if this purchase consideration is less than the net assets, then it is a capital profit for you. So then difference amount will be credited to, okay, here the difference amount will be credited to capital reserve account. Now, shortcut trick what you can remember is, will not be making this workings where we would first find net assets, then compare it with purchase consideration. What you all can do is, you pass this journal entry asset account debit to liabilities to vendor account, leaving one line in between. Okay, what you do is you pass this entry leaving one line in between, and after passing the journal entry, assets you record with assets amount, liabilities you record with liabilities amount, vendor you record with purchase consideration amount. If the balancing figure remains in debit column, then in between the line which you have left, you debit that amount to goodwill account. If the balancing figure remains in credit column, then in between the line which you have left, you credit that amount to capital reserve account. So very simple procedure, no workings are required over here. You simply pass the journal entry assets to liabilities to vendor, and you leave one line in between of debit and credit accounts. If the balancing figure remains in debit column, you write goodwill, credit column you write capital reserve. So this trick you can mention, this shortcut you can mention over here. What you will be doing is, if balancing figure remains in debit column, okay, if balancing figure remains in debit column, then record as goodwill account. Okay, if balancing figure remains in debit column, then record as goodwill account. And in credit column, then capital reserve account. So this shortcut we will be following. Okay, if it remains in credit column, then recorded as capital reserve account. Okay, so this trick you will remember. If balancing figure remains in debit column, then you take it as goodwill account. If it remains in credit column, then you take it as capital reserve account. So first entry is completely done for taking over assets and liabilities. Now we understand the entries to be passed for issue of debentures. So second entry, now we have purchased assets or we have purchased assets and liabilities. Now we will issue the debentures to the vendor. So for issue of debentures. Now as we discussed in issue of debentures for cash, that debentures can be issued in three different ways. Okay, either it can be issued at par, or it can be issued at premium, or it can be issued at discount. So if debentures are issued at par, then vendor is the receiver, debit the receiver, vendor account debit. Debentures are payable, credit the payables, so to debentures account. And as I discussed in the last lecture itself with you, wherever you record debentures, you'll always record it with face value. Keep this in mind. Second, if debentures are issued at premium, okay, if debentures are issued at premium, then vendor is the receiver, debit the receiver, vendor account debit. Debentures are payable, credit the payables, to debentures account, always with face value. Okay, as we have discussed, always with face value. And here premium is our capital profit, credit all incomes and gains. So to securities premium account with the amount of premium. And third, if debentures are issued at discount, okay, if debentures are issued at discount, then vendor is the receiver, debit the receiver, vendor account debit. Now here discount is our capital loss, debit all expenses and losses. So discount on debentures account debit, and debentures are payable, credit the payable to debentures account. I hope everyone is clear with this. But here, particularly in second and third situation, as such we are doing all the three situations, whether par, premium or discount, but particularly in this second and third situation, okay, you can write it below also. Before you pass this entries of issue of debentures, you will have to make the workings and find number of debentures to be issued. Because until and unless you find number of debentures to be issued, particularly in second and third situation, you cannot get these amounts. Debentures would be number of debentures into face value. Security premium would be number of debentures into premium. You cannot get these amounts. Same way here, discount on debentures would be number of debentures into discount, and two debentures again would be with number of debentures into face value. Debentures wherever we record, we write with face value. These amounts cannot be obtained until and unless you have number of debentures to be issued available with you. So how would you find that? Whatever is the purchase consideration payable to the vendor, okay, whatever is the purchase consideration payable to the vendor, you will divide it by issue price of debentures. Okay, you will divide it by the issue price of debentures. You will get the number of debentures to be issued, and once you get number of debentures to be issued, then these amounts can be obtained. Even in first situation you can find it, but the amount of vendor and debenture is going to remain same what you credit over here. So practically in the first situation it is not required, but in second and third situation number of debentures to be issued are definitely required to find the amount of debentures, security premium, discount on debentures or debentures. Okay, now here again, what is this issue price over here? Okay, this issue price over here means if the debentures are issued at par, then the issue price is equal to face value itself. If they are issued at premium, then the issue price would be face value plus premium. Means if they are issued at 10% premium, then issue price will become 100 plus 10, 110. And if they are issued at discount, then issue price will become face value minus discount. So if 5% discount, then issue price will become 100 minus 5, 95. Okay, so this is how we have to find the entries for issue of debentures for consideration other than cash. You can pause the video and rewind and revise it again before we take up with the practical questions. So pause the video, rewind, revise it again, or refer to your notebook and understand the entries once again. Total 2 entries will come for every situation. One is for taking over assets and liabilities, and second is for issue of debentures. In second entry, 3 alternatives are possible. The debentures may be issued at par or premium or discount. Take out question number 2 of your study material. Pause the video, take out question number 2 and revise with all these entries first before we start with the practical questions. So look at question number 2, everyone, be attentive. DEF Limited acquired fixed assets valued at rupees 6 lakhs. Current assets valued at rupees 1 lakh and liabilities valued at rupees 1 lakh. So as we discussed, first entry we will pass for taking over assets and liabilities. Assets have debit balance, so assets we will debit. Liabilities have credit balance, they are payables, credit the payables, so liabilities we will credit. Now 6 lakhs plus 7 lakhs, you are getting assets of 6 lakhs plus 1 lakh, you are getting assets of 7 lakh, and you are getting a liability of 1 lakh, means 7 minus 1. You must be paying what amount to DEF Limited? 6 lakhs. It is agreed to discharge the purchase price by issue of 12% debentures of rupees 100 each, and date is given also on 1st April 2017. So this is issue of debentures for consideration other than cash. You are settling the purchase consideration by giving debentures, but what you are getting is assets and liabilities. On the same day, securities premium account had a balance of rupees 40,000. So this security premium will be used in writing of that discount account amount. Okay, security premium will be used in writing of the amount of discount. Pass journal entries under each of the following situations. So first, purchase price is 6 lakhs and 12% debentures are issued at par. So all of you make the format of the journal entries, make around 2 pages format because 5 situations are there. And every situation will have 2 entries, one of buying the assets and liabilities and second of issue of debentures. So 2 pages format will be needed. All of you make this format, journal entries in the books of DEF Limited for around 2 pages. Pause the video and make the format. I hope you all are done with the formats. Now be attentive. First situation, purchase price of 6 lakhs and 12% debentures are issued at par. So first we take up with situation 1. Now in that, first entry would be for purchase of assets and liabilities. So what entry we will pass? Fixed assets become our assets, debit all. In fact, debit what comes in, or you can say assets have debit balance. So fixed assets account will debit with 6 lakhs. And then current assets are also there. So current assets also become our assets. They are also debit balances. So current assets account debit with 1 lakh. Now here you all can see that we are supposed to pay 6 plus 1 7 minus 1 6 lakhs, and we are paying also 6 lakhs, exactly same amount. So neither there is goodwill nor there is capital reserve. So no need to leave any line in between. Okay. Why no need to leave any line in between? Because this 6 lakhs is equal to net assets itself. So neither there is goodwill nor there is capital reserve. Neither you are paying more nor you are paying less. You are paying the perfect equivalent amount only. So directly you can credit to liabilities account, that is 1 lakh, and then to DEF Limited account. Here vendor, who is the vendor or the seller? Okay, DEF Limited has acquired, but from which company it is acquired is not mentioned. I'm sorry. So not DEF Limited account, but to vendor account. Okay, name of the vendor is not given, with the purchase consideration of 6 lakhs, which is matching with the net assets also. So neither there is goodwill nor capital reserve. Being assets and liabilities acquired or taken over. Now, second entry we will pass for issue of debentures. Here the debentures are issued at par. So I told you particularly that workings will be required when the debentures are issued at premium or discount. Here they are issued at par, so any workings of number of debentures won't be required. Directly you can pass the entry. Vendor is the receiver, debit the receiver. So vendor account debit with 6 lakhs. This same amount. What we are supposed to pay to the vendor is 6 lakhs. And 2. Now, is the rate of interest mentioned? 12% debentures are issued. So, debentures are payable, credit the payables to 12% debentures account 6 lakhs. Being, now 6 lakhs we have to pay, so divide by 100. You can say 6,000 debentures issued at par. Okay, how did you get this 6,000 debentures? 6 lakhs divided by 100. Here we have not done any workings, but 6 lakhs we have to pay. Issue price is 100 at par. So 6,000 debentures would be issued, just for your understanding. Okay. So first situation is completely done. Now we take up with the second situation. Look at it. Same situation, if you are paying purchase price of 6,70,000. Net assets are 6 plus 1 7 minus 1 6 lakhs. Here you can say that you are paying more than net assets. How much more? Net assets are 6 lakhs. You are paying 6,70,000, means you are paying 70,000 more. So that will be debited to goodwill account. But you can follow that shortcut. Pass the journal entry, leaving one line in between. And 12% debentures are again issued at par. Since they are issued at par, again the workings of calculation of number of debentures won't be required. So first entry, fixed assets become our assets. They have debit balance. So fixed assets account debit with 6 lakhs. Current assets become our assets. Assets have debit balance. So current assets account debit with 1 lakh. Now you all leave one line in between. Okay, leave one line in between, and then to liabilities account, liabilities are payable, credit the payables 1 lakh, and then to vendor account. Okay, amount is payable to the vendor, credit the payables. Now here what amount is payable to the vendor? I told you vendor will always record with purchase consideration. Okay, vendor we will always record with purchase consideration. So here the amount payable to the vendor is 6,70,000. So all of it write down 6,70,000. Now see, debit amount is 6 lakhs plus 1 lakh 7 lakhs. Credit amount is 6,70,000 plus 1 lakh, 6,70,000. So can I say 70,000 will be the balancing figure remaining in debit column? As I said, if it remains in debit column, then you debit it to goodwill account. Balancing figure. So this shortcut is what you can follow, and workings are not required in that case, being assets and liabilities acquired. Okay, if the same balance remains in credit column, then you write it as capital reserve. Now second entry we will pass for issue of debentures, and here it is clearly given the debentures are issued at par. So simply vendor is the receiver, workings are not required directly. Vendor is the receiver, debit the receiver, vendor account debit with 6,70,000. Okay, the same amount. This is what we have to pay to the vendor. And we are again giving 12% debentures at par. So to 12% debentures account. Debentures are payable. Credit the payables to 12% debentures account 6,70,000. Now here 6,70,000 divided by 100. How many debentures would be issued? Being 6,700 debentures issued at par. As I explained you over here, how will you count this? 6,70,000 divided by 100. So how many debentures would be issued? 6,700 debentures will be issued. Now, second situation is also done. We move to the third one. Be attended. Being purchase price of 5,80,000. Now 5,80,000 is less than the net assets of 6 lakhs. So here we are paying less. How much less? 20,000 less. That is our capital profit will transfer to capital reserve. And 12% debentures are again issued at par. So workings won't be required for number of debentures. So third one, all of it are down first. Fixed assets become our assets. Assets have debit balance. So fixed assets account debit with 6 lakhs. Current assets become our assets. Assets have debit balance. So current assets account debit with 1 lakh. Now leave one line in between. Then liabilities are payable, credit the payables. So to liabilities account 1 lakh. And vendor amount is payable, credit the payables. Now here what amount is payable to the vendor? What is the purchase consideration? 5,80,000. Okay, I told you vendor with purchase consideration. Now see here, if you see, then debit is 7 lakhs, but credit is only 6,80,000. So here the balancing amount remains in debit column or credit column? Credit column. 7 lakhs minus 6,80,000, 20,000 remains in credit column. Since it remains in credit column, you'll write it as to capital reserve account in bracket balancing figure. So this shortcut is what you can follow. Okay. Balancing figure in debit column, goodwill, credit column, capital reserve. Being assets and liabilities acquired. Now second entry will pass for issue of debentures. Again they are issued at par. So simply vendor is the receiver, debit the receiver. So vendor account debit with the amount of 5,80,000. Okay, vendor account debit with this amount of 5,80,000. And then again we are issuing the debentures at par. So debentures are payable, credit the payables to 12% debentures account 5,80,000. Now here 5,80,000 divided by 100. How many debentures will be issued? Being 5,800 debentures issued at par. So third situation is also done. Now we move to the fourth situation. Look at it, be attended. Purchase price of 6,50,000. Okay. Now what is the purchase price? Or if we can see 6,50,000, that is more than the net assets of 6 lakhs. So here again we are going to have goodwill. And moreover, 12% debentures are issued at 30% premium. So before we pass the second entry, we will have to find number of debentures. That working note, what I explained you. How to find the number of debentures we will have to do. So first let us pass the first entry. That can be done without the workings. Fixed assets become our assets. They have debit balance. So fixed assets account debit with 6 lakhs. Current assets become our assets. They again have debit balance. So current assets account debit with 1 lakh. Now leave one line in between. Liabilities are payable, credit the payables. So two liabilities account with 1 lakh. And vendor is the giver, credit the giver, or amount is payable to the vendor to vendor account. Now what amount is payable to the vendor? The purchase consideration is 6,50,000. Now see, debit is 7 lakhs, but credit is 7,50,000. So can I say difference of 50,000 remains in debit column? If balancing figure remains in debit column, you will write it as goodwill account. Okay, balancing figure remaining in debit column, we debit to goodwill account. Being assets and liabilities acquired. Then second entry. Now before we pass the second entry, since debentures are issued at premium, we'll be making the workings. So all of you make this working notes for the same. How will we make the workings? Understand it. In workings, what we have to do is we have to count the number of debentures to be issued. For that, the formula is number of debentures to be issued is equal to, look at this formula I made you write just now today itself, whatever is the purchase consideration or purchase price of the business divided by issue price of debentures. Okay, purchase consideration or purchase price divided by issue price of debentures. Now here we are making working note 1 for situation 4. So in situation 4, what is the purchase consideration? Okay, purchase consideration amount payable to the vendor with the purchase consideration is 6,50,000. Further, divided by what is the issue price of debentures? That again you all can see that in this fourth situation, debentures are issued at 30% premium. 30% premium means issue price will become 100 plus 30, 130. I told you, if it is issued at par, then issue price is face value. If it is issued at premium, then it is face value plus premium. So all of you do it, 6,50,000 divided by 130 would be 5,000. How many debentures would be issued? 5,000 debentures would be issued. Now we can pass the second entry. Okay, very necessary to find this number of debentures before you pass the second entry. Vendor is the receiver, debit the receiver. So vendor account debit with 6,50,000. Same amount what we credited to vendor account in the first entry. Now debentures are issued at premium. So 12% debentures are payable, credit the payable to 12% debentures account with face value. 5,000 debentures are issued, so 5,000 into 100, 5 lakhs. Okay, that's why we made this workings. How many debentures are issued? 5,000. So 5,000 debentures are issued means 5,000 into 100. The amount of debentures would be with face value 1 lakh. And then to securities premium account, since they are issued at premium, 5,000, same 5,000 debentures into 30 rupees is premium, 30% premium, 1,50,000. So this entry was what I was talking about. You cannot pass this entry until you make the workings and find the number of debentures. Being 5,000 debentures issued at premium. Okay, in fact 30% premium, you can mention 30% premium. Now fifth and last situation be rendered. Purchase price is 5,40,000. Now against net assets 6 lakh, 5,40,000 means purchase price is less than net assets. So again we will have the situation of capital reserve 60,000 less we are paying. That is our profit we will transfer to capital reserve. But here 12% debentures are issued at 10% discount. Now they are issued at discount. So we'll have to again make the workings and find the number of debentures before we pass the second entry. So in the fifth situation, or if we write down the first entry, fixed assets become our assets. So assets have debit balance. Fixed assets account debit with 6 lakhs. Current assets become our assets. Assets have debit balance. So current assets account debit with 1 lakh. Then you leave one line in between because we don't know would it be a goodwill or capital reserve. Liabilities are payable, credit the payable. So two liabilities account credit with 1 lakh. And then amount is payable to the vendor, credit the payables. Now what is the purchase consideration payable to the vendor? 5,40,000. Now see, debit is 7 lakhs, credit is 6,40,000, credit is less. So what balancing figure remains in credit column? 60,000. That we will credit to capital reserve account in bracket balancing figure, being assets and liabilities acquired. Now, before we pass the second entry, again we'll make this workings for situation 5. Okay, to find out how many debentures would have been issued in this situation. Now, what is the purchase consideration in this situation? Formula is purchase consideration divided by issue price of debentures. In this situation, the purchase consideration is 5,40,000. But okay, here the purchase consideration is 5,40,000. You all can see that amount payable to the vendor. But in this situation, debentures are issued at 10% discount. Since they are issued at 10% discount, what would be the issue price of debentures? 100 minus 1090. So 5,40,000 divided by issue price 90 means 6,000 debentures would be issued to settle the purchase consideration. So with 6,000 debentures, now we'll pass the second entry. Okay, this was situation 5. What second entry will be passed for 6,000 debentures? Understand it. Vendor is the receiver, debit the receiver. So vendor account debit with the full amount, that is 5,40,000. Amount payable to the vendor was 5,40,000. Same amount we will debit. Now, here we are issuing the debentures at discount. So discount is our loss, debit all expenses and losses. So discount on debentures account debit. Now 6,000 debentures we are issuing, and 10% means 10 rupees is discount of 100s, 10% face values, 10% 10 rupees. 60,000 is the amount of debentures discount. And to 12% debentures account, debentures are payable, credit the payable. Debentures always with face value. So 6,000 into 100, 6 lakhs. So this entry you cannot pass until you find the number of debentures which we obtained as 6,000. Discount with discount amount 6,000 into 10, 60,000. Debentures with face value 6,000 into 100, 6 lakhs. Being 6,000 debentures issued at 10% discount. Now one more entry will come over here for writing of this discount. Okay, this discount of 60,000 we will write off from which amount? From security premium. And here security premium has a balance of 40,000 only, whereas discount is 60,000. So 20,000 we will take from profit and loss account. Means what? One more entry will come. Securities premium account debit with 40,000. Security premium is only 40,000. Profit and loss account debit. Profit and loss account debit is remaining balance of 20,000 because we have to write off discount of 60,000 to discount on issue of debentures, or to discount on debentures account with 60,000. Okay, so this discount on debentures 60,000 will be written off. 40,000 from security premium, and since security premium is insufficient, remaining we will take from profit and loss account. B, discount on debentures written off. Okay, so these are the entries are to be passed. Now this reminds me of one more thing, that the question which we did in the last lecture, question number 1, even in that question, wherever we had discount, that discount would be written off from securities premium account. So you all can see that situation 1 was par premium, then situation 3 was par, 4 was premium, then 5th was again par. Now here it was discount. 6th situation we had discount. Okay. 5th situation we had discount. So this discount would also be written off. This discount 10,000 would also be written off from security premium, and in this question also we had security premium balance of 50,000. So in the question number 1 also, all of you insert this entry for writing of the discount. Okay, what entry would be passed here? Second entry would be securities premium account debit. I am making the correction in question 1's solution, what we had done in the last lecture. Securities premium account debit with 10,000. Okay, balance is sufficient. We had what amount? 50,000. So 50,000 is sufficient to write off this. To discount on debentures account, that would come with 10,000. Okay, narration I am not making you that being discount on debentures written off, and same would happen over here also. This 5,000 of discount will also be written off. So securities premium account will debit with 15,000. Why 15,000? 10,000 to write off loss on issue of debentures and 5,000 to write off discount on debentures. So to discount on debentures account 5,000. So keep this in mind. Even discount on debentures like loss on issue of debentures is to be written off. Okay. So this situation is completely done. All the 6 situations are covered, and workings are exclusively required when debentures are either issued at premium or at discount. Now we take up with the next concept of issue of debentures, redemption of debentures, next topic. So again, go back to summary, every one of you. Yes, now in the summary, all of you give the heading second topic. So first topic, issue of debentures, is completely done. Now we shift to the second topic in the chapter, that is redemption of debentures. So here we have already discussed that redemption means repayment of debentures. When you issue the debentures, at that time itself you clarify the terms and conditions, that debentures will be repaid after how many years, whether you'll repay at par or premium or discount, etc. Now we will have 4 different topics over here. One is redemption by the method of conversion. Okay, means the debentures get converted into equity shares. Second is redemption by various options. Okay, various options means you give them the options and they can exercise the option on their own, whether they want to take cash, or they want to take equity shares, or they want to take preference shares, or they want to take debentures. Even new debentures can be given against old debentures. So many options are given. So repayment can be done by various modes of payments, either in the form of cash or equity or preference or debentures, and some debentures will go in for the first option, some will go for the second, some will go for the third, and some will go for the fourth. So second type of redemption is by various options. Third is the concept of debenture redemption reserve as per the company law. Okay, concept of debentures redemption reserve as per the company law, that we will see in detail in practical questions. And last, we will see the method of sinking fund. So all of you write down this in your notebook in the summary. I told you to leave 5 pages in the summary, there over you write it down. 4 different topics are covered in redemption of debentures. One is conversion, second is by various options, third is debenture redemption reserve, and fourth is sinking fund. Today we take up the first method, that is by conversion. Now conversion means debentures get converted into equity shares. So very first the entry will be passed for redemption of debentures. Redemption means the money becomes due to be repaid. Okay, the money becomes due to be repaid. So for redemption of debentures, what entry we shall pass is. Now, for redemption of debentures, two things are possible. If the debentures are redeemable at par, okay, if the debentures are redeemable at par, then simply debentures account we have to close and debit. Earlier, we credited the debentures account being a liability. Now we are settling that, so debentures account you'll reverse and debit to close it. An amount becomes payable to debenture holders, credit the payables, so to debenture holders account. So when we issued the debentures, we have been crediting the debentures. Okay. So now when you settle the debentures, repay the money, that account you will reverse and debit and close. And the amount is payable to debenture holders, credit the payable, so to debenture holders account. If the debentures are to be redeemed at premium, then two accounts you will debit. Debenture is also a liability which was credited earlier, and you will debit and close that liability. And one more liability we had credited, premium on redemption, that is also our liability. We discussed in the first lecture that effect of redemption is given at the time of premium. Lost on issue to premium on redemption, that effect is given at the time of issue. So that we credited premium on redemption as our liability. Now we are repaying the money, so that premium on redemption liability will be closed and debited. And total of this amount is payable to debenture holders, credit the payable, so to debenture holders account. Okay. So very first of all, for redemption of debentures, what entry we will pass? If they are redeemable at par, debentures account debit to debenture holders account. If they are redeemable at premium, debentures account debit, premium on redemption account debit to debenture holders account. And then second, conversion means we are going to convert into equity shares. So for conversion into equity shares, okay, or for issue of equity shares, we are going to give them equity shares. So for conversion into equity shares. Now debenture holders in both the situations are the receiver, debit the receiver. So debenture holders account debit. Okay, debenture holders are the receiver, debit the receiver, debenture holders account debit, and equity shares goes out. We give them equity share, credit what goes out. So to equity share capital account, or you can say equity share is our liability, credit the payables to equity share capital account. Now here, if the shares are issued at premium, you'll credit to security premium account also. And if they are issued at discount, you'll debit share discount account also. Here shares can be issued at discount. As per Companies Act 2013, you cannot issue the shares at discount when you issue them for cash. Here we are not issuing the shares for cash. Here we are issuing the shares for consideration other than cash. Against the debentures liability we are issuing them. So here shares can be issued at discount also. Okay. So if they are issued at par, simply do equity share capital. If they are issued at premium, then further you'll credit security premium. And if equity shares are issued at discount, then you'll debit share discount account also. And this number of equity shares we can find, because if they are issued at premium or discount, like we issue debentures at premium or discount, we have to find number of debentures to be issued. Same way, if equity shares are issued at premium or discount, we have to find number of equity shares to be issued. So that would be amount payable to debenture holders. Okay, whatever amount is payable to debenture holders divided by issue price of equity shares. Here we are finding the number of equity shares to be issued. So divided by issue price of equity shares. Exactly same way. If they are issued at par, equity shares are issued at par, then face value premium, then face value plus premium, discount, then face value minus discount. So this working we have to do only if equity shares are issued at premium or discount. Otherwise these two amounts will exactly match. So all of you look at question number 3. All of you take out question number 3. All of you look at question number 3 and 4. 2 questions will be taking up. What I'll be doing is I will solve question number 4 on the screen because there is more situations, and then you all try question 3 completely on your own and you verify whether you got the answer right or not. So I am solving question 4 and question 3. Every one of you will be trying on your own. Look at question number 4. JKL Limited redeemed 30,000 12% debentures of rupees 100 each, which were issued at par but due for redemption at 105%. Now redemption at 105% means you all can say 5% premium. The debentures are to be redeemed at 105%, means they are to be redeemed at 5% premium. How they are to be redeemed at 5% premium? Through conversion, as we discussed right now, through conversion on 31/3/18. So all entries we have to pass on 31/3/18. When debentures are redeemed by conversion into equity shares, now this of rupees 10 each at par. At par means no need of the workings. But in the second situation, when debentures are redeemed by conversion into equity shares of 10 each at 5% premium, we'll have to make the workings. We'll have to find number of equity shares to be issued. And even in third situation, when debentures are redeemed by conversion into equity shares of 10 each at a premium of rupees 40, we will have to make the workings to find the number of equity shares to be issued. So all of you make the format of journal entries in the books of JKL Limited. Pause the video and make the format. I hope you all have done the format. Now date is going to remain common. All entries are to be passed on 31/3/18. So one time heading you can give 31/3/18, all entries on that date. Now first entry will be for redemption of debentures as we discussed. So this 12% debentures. Okay, this is our liability that we will reverse and debit to close it. So 12% debentures account debit. To close that liability, we will reverse and debit it. Now we'll debit it with what amount? Face value. Okay, debentures, I told you throughout the chapter, wherever you record debentures, always with face value. So 30,000 into 100. What will be the face value of these debentures? 30,000 into 100. 30 lakhs. Now since they are redeemable at premium, okay, as I discussed, they are due for redemption at 105%, means here 5% is premium. So even premium on redemption is our liability which we have to close and debit. So premium on redemption account debit. Same 30,000 debentures into 5% premium is 5 rupees is our premium liability. So 1,50,000. And debenture holders account. Okay, amount is payable to debenture holders. Credit the payables. So to debenture holders account. With the amount of 31,50,000. Being 30,000 debentures redeemed at 5% premium. Now, second entry we will pass for issue of equity shares, and here we have 3 situations. Okay, in the second entry, what we have is 3 situations. First entry would remain same in all the situations. So for second entry, we have 3 situations. First situation, the equity shares are issued at par. Since the equity shares are issued at par, here no workings are required. Directly you can say debenture holders are the receiver, debit the receiver, debenture holders account debit with full amount of 31,50,000. Okay, debenture holders are the receiver, debit the receiver, debenture holders account debit with full amount of 31,50,000. And since we are issuing the equity shares at par, equity share goes out, credit what goes out to equity share capital account with 31,50,000. And 31,50,000 and face value of equity shares is 10 rupees. So 31,50,000 divided by 10. How many equity shares would have been issued? 31,000, 3,15,000. Okay, 31,50,000 divided by 10. So how many equity shares would have been issued? Total 3,15,000 equity shares would have been issued. So here workings are not required, directly we can do it. Being 3,15,000 equity shares issued at par to debenture holders. So this is through conversion. Okay. Now, second situation, all of you look at it, be attentive. Here the debentures are redeemed by conversion, but at 5% premium. We are giving the equity shares at 5% premium. So here we'll make the workings. Okay. What workings will make over here? Understand it? We'll make the working to find number of equity shares to be issued, as I made you write in the summary. Here we are going to issue the equity shares. So before we pass the entry at premium, we'll have to find number of equity shares to be issued. How do you find that? The formula is amount payable to debenture holders. Okay, amount payable to debenture holders divided by issue price of equity shares. Divided by issue price of equity shares. So working note 1 we do for situation 2. In situation 1 we need not do this working because they were issued at par. Now in situation 2, what is the first of all amount payable to debenture holders? Amount payable to debenture holders is this 31,50,000 itself. Okay. So amount payable to debenture holders 31,50,000 and divide by issue price of equity shares. Now here it is given that they are issued at 5% premium. So we discuss how do you find the issue price. Face value 10 plus 5% premium is 0.5. Okay, 10 rupees 5% is 0.5. So 31,50,000 divided by 10.5. Okay, 31,50,000 divided by 10.5 means 3 lakh equity shares would be issued. How many equity shares would have been issued? 3 lakh equity shares would have been issued. So what entry we will pass for this? Debenture holders are the receiver, debit the receiver. Debenture holders account will debit with again that full amount of 31,50,000. Okay. There are two different situations. So debenture holders account again you'll debit with full amount of 31,50,000. But now we are giving equity shares at premium. So equity share goes out, credit what goes out to equity share capital account with face value. We have issued 3 lakh equity shares. So 3 lakh into 10 rupees of equity shares face value 30 lakhs. And to securities premium account. Okay, 0.5 rupees is of premium. So 3 lakhs into 0.5. 3 lakhs into 0.5. 1,50,000 is of security premium. These amounts you cannot obtain until and unless you find this number of equity shares. So for that this workings would be required. Okay, now here being 3 lakh equity shares issued. Okay, here 3 lakh equity shares issued at premium, 5% premium to debenture holders. Are you all clear with this? Now third situation is exactly same. So you all can even pause the video and try on your own. Here we are issuing at 40 rupees premium. So pause the video, make the same workings, then play the video and verify whether you got it correct or not. I am doing it directly. Situation 3. Amount payable to debenture holders is 31,50,000 and 40 rupees premium. So face value 10 plus 40 premium. Issue price will become 50 rupees. So 31,50,000 divided by 50. How many equity shares would be issued? 63,000. Okay, here 63,000 equity shares would be issued. 31,50,000 divided by 50. So similar entry what will be passed here now? Debenture holders are the receiver. Debit the receiver. Debenture holders account debit with the amount of 31,50,000. What we have to pay to debenture holders is full amount of 31,50,000. You all can see same amount 31,50,000. Here also we have to debit. Okay, same amount here again we have to debit 31,50,000. Now we are again issuing the equity shares at premium. So to equity share capital account, equity share goes out, credit what goes out. Now we are issuing 63,000 equity shares. So 63,000 into 10, 6,30,000 will go to equity share capital account, and to securities premium account, same 63,000 equity shares, but here 40 rupees is premium. Okay, here we issued at 40 rupees premium. So 63,000 into 40 rupees, 60,000 into 40, 24 lakhs. So 25,20,000. And you all can see 6,30,000 plus 25,20,000 is equal to 31,50,000. Being 63,000 equity shares issued at 50 rupees premium. Here they are issued at 40 rupees premium, not 50. Issued at rupees 40 premium to debenture holders. Okay, so all the three situations are covered. Now I discuss question number 3. All of you pause the video and try it on your own, and then you play the video and verify whether the solution is right or not. I'll be doing the solution directly, but I want you all to try on your own. GHI Limited issued 55,000 shares. Directly given 55,000 shares are issued. You don't even have to make the workings to find the number of shares. And how they are issued? At par. Clearly given they are issued at par. So debenture holders to equity share capital. To redeem rupees 5 lakhs, again rupees 5 lakhs. So 5 lakhs divided by 100, 5,000 debentures would be there. 12% debentures of 100 each, but they are to be redeemed at 10% premium. Okay. So journalize. All of you make the formats and try the question on your own. First entry would be 12% debentures are our liability. To close them, we will reverse and debit them with 5 lakhs. Okay, face value already given 5 lakhs, or as we have calculated 5,000 debentures into 100, that is 5 lakhs. Then also they are going to be redeemed at 10% premium. So premium on redemption is our liability, that also we have to close and debit. 10% premium means 10 rupees is premium, so 5,000 into 10. Premium liability would be 50,000. And debenture holders, we have to pay the money. So amount is payable to debenture holders, credit the payables. What amount is payable to debenture holders? 5,50,000. Being 5,000 debentures redeemed at 10% premium. Now second entry what we will pass is for issue of equity shares. Since equity shares are issued at par, no workings are required. Directly we can pass the entry. Debenture holders are the receiver, debit the receiver. So debenture holders account debit with 5,50,000, the same amount. And then we are giving them equity shares. So equity shares goes out, credit what goes out to equity share capital account with 5,50,000. You can say 5,50,000 divided by 55,000 shares would be issued, and it is clearly given 55,000 shares. Okay, it is given over here that 55,000 shares are issued at par of rupees 10 each, being 55,000 equity shares issued at par to debenture holders. Now there is only one situation, so here you can do the totals also. 5,50,000 plus 5,50,000 would be 11 lakhs. Okay. So today we covered two topics in our lecture. One was issue of debentures for consideration other than cash, and second was redemption of debentures by conversion. In the next lecture, we'll take up with redemption of debentures by various options. That'll be all for today's lecture. Bye everyone. Take care. See you in the next lecture.